Hey, what's up everyone? This is Silver Slayer. Thank you for tuning into this video. A lot of people wonder whether gold or silver is the better investment, which has more potential. Well, in my opinion, silver has much more potential than gold. Silver has already outperformed gold with over a 30% return. That's going to be the topic of the first article, and then we have a second article talking about the moment of truth for gold, silver, and platinum. It's definitely going to reflect upon the best strategy for you so you can invest profitably, right? There's so many new eyes, so many new investors in the world of precious metals, and sometimes it is hard to kind of figure out which is best for your portfolio. So this is going to be explaining why silver could be so perfect for you. So before we start, make sure to smash that like button. Let's see if this video can get 200 likes. Everyone go like the video right now if you love precious metals. Let's jump into it. So silver spot is gaining the global attention amid improved industrial activities and demand for physical investment. The silver spot has rallied over 58% in the recent past and has delivered a return of 30% on a QTD basis. So it was down to $11.74 and then it hit up to $18.40, which means that's a 58% rise. That's why silver is skyrocketed. Money managers are strongly betting on silver, with net longs spiking to resemble June 2019 positions when silver spot breached the 3-year high. Silver is poised to test its medium-term resistance, while the gold to silver ratio around the crucial support, a turnaround from where would again make the gold poster boy as compared to silver, and failure to do so would keep the white shine bright. So silver spot is capturing the eye of bullion investors, with the spot price rallying from $11.64 per ounce the intraday on March 18th to the present high of $18.43 per ounce on June 1st, which makes a price gain of 58%. The recovery in global industrial activities, along with improved risk appetite, is now fueling base metals, and due to its investment demand and status as a precious metal, silver is now standing tall against gold once again, with a total return of 30% on a QTD basis, which remains significantly higher against the QTD total return of 10% provided by gold spot. So gold only rose 10% while silver tripled that. In the status quo, the Silver Institute estimated that silver spot would average $19 per ounce for the year, witnessing a 4% decline in the global supply amid an increase in silver demand as a physical investment, which is estimated to grow by 16% during the year by 2020, said the Silver Institute. The year 2020 witnessed a dramatic turnaround in investor sentiment towards silver, with net longs rising dramatically at the beginning of the year, which closely resembled the activity of June 2019 to September 2019, when the silver spot rose to touch a 3-year high of $19.67 per ounce in September 2019. During the first quarter of the year, the net longs in silver spiked once again to resemble the previous spike seen during the June 2019 high, and the spot price once again rallied. However, in the status quo, while the spot price is yet sermoning, the net longs in silver are again witnessing a downfall. Though in recent weeks there has been a slight spike in the net longs, which has supported the spot price of silver as well. So on the daily chart, it could be seen that silver spot broke above the triangle pattern formation and rose to test its medium-term resistance level of $18.70, which is overlapping with the +1 standard deviation, or SD, of the 20-day simple Bollinger Band. Furthermore, the standard deviation of the Bollinger Band has expanded post the breakout, reflecting on the momentum gained by the silver spot. And in the status quo, the 200-day EMA and the 50-day EMA are narrowing the spread, suggesting that if the spot crosses its medium-term resistance and sustained moving averages, would give a positive crossover. Also, the mean value of the Bollinger Band, which is a 20-day simple moving average, is crossing the 50-day and 200-day EMA from below, suggesting that the prevailing sentiment around the commodity is bullish in nature. The breakout of the triangle pattern has occurred post Doji candle emerged on the chart. Next day trading session remained bullish and crossed the high of the Doji to seed bullish sentiments. Now the silver spot is testing the medium-term resistance level of $18.70, and a break sustain above the same would further propel bullish sentiments, and a failure to do so would attract bears. So we're definitely in a crucial spot, and that's what this article is talking about, the moment of truth. We're either going to see silver bearish for a while, or we could see higher prices. Now, I keep talking about the short term is irrelevant, but the short term doesn't look too bullish for precious metals. What's bullish for silver is the medium and long term. The short term could stay low, but that's natural. That's where prices are looking. The medium to long term is where the true potential of silver, more specifically silver, is headed. So let's jump into this. So no one ever said that trading and investing were easy. Just a couple days ago, the metals were rolling along, looking to make new near-term highs without a care in the world, and no doubt they were going up. Suddenly, gold, silver, and platinum find themselves under pressure and fighting to hold major support. Since peaking on Monday, gold finds itself struggling to hold $1,720 to $1,725 support in the August futures, silver $18 to $18.10 in the July futures, and platinum $850 to $860 in the July futures. These support levels are now the key in the next move. Does the rally continue, or is it over? From our view, the rally should continue, but we are close to a reversal. Gold, silver, and platinum have tested these major levels in the past. They should hold. The run higher should continue. We are now offering a comprehensive commodity report that complements our other services. The Technomental Commodity Report comes out Wednesday evenings and provides a comprehensive fundamental and technical coverage of most commodities that trade on the futures market in the US and UK, as well as stocks, bonds, and digital currencies. There is a summary report on Friday after the markets close, and robust quarterly reports on each of the 6 commodity sectors in a general overview that recaps the past 3 months and offers projections and suggestions over the next quarter. Andy Hecht, the author of the report, has been a commodity trader since the early 1980s and has vast experience in the markets across all asset classes. So, talking about this moment of truth, right? Silver and gold both are separate categories. They're separate investments or separate metals. Now, silver has a one-up leg on gold since it has more industrial use, especially in the technological era we're advancing in, with 5G technology, with solar panels, with electric vehicles, right? Silver is widely used in these things. So not only is silver a safe haven metal in times of economic turmoil with the 2020 presidential election coming up and everything going on, but also in its industrial use with its supply and demand, with imported, exported goods. And now this virus, if there's a second wave, silver could be bullish from this. But even if there isn't, even if the economy recovers, silver could be bullish from that. So silver's in a win-win situation where even if the economy recovers, that's going to help silver because this more silver will be flooding the markets and flooding these industries. But even if there is the virus having a second wave, silver, seen as a safe haven metal, will be bullish. So silver has potential no matter what happens, unlike gold, which is basically or strictly off of a safe haven monetary metal status. So that's why silver has so much more potential. That's why silver has outperformed gold by 30%, and it's definitely sharing. The information can't lie. The numbers can't lie. The gold to silver ratio was up to 125 to 1. Now it's down to 95 to 1. So silver has dropped 30 points. Silver has passed gold by 30 points from the gold to silver ratio, sharing that silver is drastically outperforming gold right now. So people are speculating that the ratio could go even lower to the 60 to 1 level, 70 to 1 level, meaning that silver is going to outperform gold even further. So I definitely think that gold is already at a top and silver is still at a bottom that hasn't really appreciated yet. Silver has a lot of catching up to do. Now, when gold appreciates, silver's more volatile, so it hits higher highs. So if silver is going to appreciate, I think it's going to happen over a more gradual process, not like gold that just explodes. So there still is potential for silver. I would love to hear what you have to think about gold and silver, though. diversification is always key. You know, diversifying a little bit into gold is definitely not a bad thing. Gold still has its potential. It's a great way to store a lot of value in a small area. You can fit $100,000 of gold in a shoebox. You can't do that with silver. So gold does have some perks that silver doesn't have. So diversification is key, but I definitely would focus more on silver, in my opinion, where there is much more potential for profits. So anyways, I hope you enjoyed this video. If you thought this video was educational, informational, or at least just entertaining, make sure to smash that like button. Let's see if this video can get 200 likes. The link to these 2 articles will be in the description. This was Silver Slayer. I'll see you guys soon. Peace.